Good morning, friends. I welcome you to video series on financial freedom. Friend, I am Ramchandra Rai and you are watching Prayas, a channel which is fully dedicated for development of your personality. Financial intelligence is integral part of personality. Therefore, I have brought this video series on financial freedom. I assure you that if you see all the video of this series, starting from PD 78, you will certainly be able to achieve financial freedom irrespective of the condition you are. Friend, we have already discussed how you can achieve financial freedom even before the age of 35. We have understood the risk. We have understood the concept of compounding. We have seen various investment options available. We have seen the area of fixed deposit. We have seen the behavior of money. All these things we have understood. Now we are in a position to understand the concept of mutual fund and we can understand how they work. And therefore today I plan to discuss the concept of mutual fund in general and in brief, so that you can understand the idea behind this instrument and take prudent investment decision. Now friend, today I am going to discuss what is the objective behind mutual fund and how it is fulfilled. But before I start discussion on this particular subject, I want to share with you that you can attend my live class, participate in live discussion on my Vichar Manch, attend integrated personality development program for time bound result, and your economic condition will not become a hurdle between you and me. For detail, you can check description box, click the links, see the content available there, and then decide in what form I can help you. Now friend, I will request you to be with me throughout this video so that you can understand the whole philosophy of mutual fund and take prudent investment decision through this channel and achieve financial freedom. If you find that this video is useful, please like it, share it, and subscribe to this channel, which is a partner in developing your personality, making you successful. Every week I bring one video on one subject, both in Hindi and English, so that you can benefit. So friend, what is a mutual fund? Why the word mutual is suffixed before this fund? Mutual means a group of people working together towards some objective with mutual cooperation. Now, in case of a mutual fund, a group of people having common investment objective deposit money to a asset management company according to their capacity to invest. They can start SIP of 500 rupees also, and can go to up to any extent. They can invest lump sum. They could have aggressive mindset, that means they want to take risk, they are risk taker. They are young, they can take risk, they are earning also, and they could be conservative also, they don't want to take risk also. So depending upon their risk taking ability, depending upon their investment objective, they make a group and they deposit money according to their ability to invest. So a common investment pool is created, which is called mutual fund. Now that fund is invested in securities keeping into mind the investment objective of the group. For example, suppose all the group members are very aggressive. They want to take risk. So they can invest, the fund will be invested mostly in equity shares, which is high yielding return asset. It can even have a very big proportion in small cap and medium cap, which has a very strong likelihood of higher growth potential. But if the group is conservative, because let us say they are all senior citizens, they have got their retirement corpus, they don't want to play with this money, they don't want that money should deteriorate or they should lose the money. So if they are pooling money together with a asset management company, perhaps this money will get invested only in debt mutual fund. That means the money will be invested in high quality corporate bonds, debentures, fixed return government securities, like that, so that their money is totally secured. Now suppose there is a group of people who have a mixed mentality. That means they want to take some risk also. They want some stability also, so that they can earn somewhat higher return than what they will earn on a debt or a fixed deposit. They can beat inflation. They can achieve financial freedom at the earliest. For such people, whatever money has been pooled, it will be invested in balance fund or hybrid fund, or maybe mixed asset fund, multi-asset mutual fund, where part of money will go to equity, part will go to debt, part will go to gold, part may go to real estate. Or there will be a combination of equity and debt in such a fashion that their investment objective is met. Now, these people who have grouped together for a common investment objective, they are common owner of this fund in proportion to their investment. And they are going to share loss or gain also in the same proportion. So net value NAV will be decided on basis of that. Now, what is the purpose of coming together? If they want and they know they can individually invest in equity or in debt or debenture, why they are pooling together? Because either they don't know the market, they have no knowledge, they don't have confidence on them, or they have no time. Either way. So they want to entrust their money to somebody who can meet their investment objective. So the fund pool of money is managed by professional fund managers who are hired by asset management company, or they may own the company, whatever may be the structure. So there is a professional manager who is managing the fund, keeping into mind the investment objective of the investors, the particular group. It will have a research team which will research in the market and select investment options which matches the objective fully. Of course, they are also to buy equity, hold them in custody, and then transact. So all those costs are also involved. So the mutual fund does not earn you return free of cost. The asset management company has to spend money on the salary of professional manager, team members, research team, and other miscellaneous expenses, the carrying cost they have to spend. And they have to recover that money from you, and plus they should earn something also profit out of this whole investment business. So all these expenses taken together, including their profit, is called expense ratio. Now, how much expense ratio is ideal, how much it should be, it depends that what type of investment objective you have selected. Suppose you have selected a very passive type of approach. You don't want to experiment too much. So you will invest in a passive fund like index fund. Now index fund, the role of fund manager is minimum. He has do nothing. The fund will automatically get invested in the company as per the index ranking, and mostly it will achieve the target of return which matches with the market index. So here the expense ratio will be very low, maybe it is 0.1%. Now suppose you are very aggressive, you want to fund manager to select proper indices for you every time, switch over from here to there and be very active on day-to-day basis. Obviously, more time will be required, more man-hour will be required, more expense will be incurred. So if you are investing your money in a equity mutual fund, lot of changes will take place, so the expense ratio will be high. Now the expense ratio could be as low as 0.1% or even less, or it could be as high as 2.5% also. Now you can imagine the loss you are going to incur because of high expense ratio. Suppose a fund has earned 12%. So they are going to deduct 2.5 from that. So you are going to get hardly 9.5% return on this. So expense ratio is very important. Now you will have a question, how much it should be there, which is ideal. Friend, anything above 1.5% is costly, you should avoid. Anybody who is charging more than 1.5% to you, from you, is mismanaging money. He is not efficient professionally. He is unnecessarily active, or his corpus size is very small. As the corpus size increases, the expense ratio reduces, because the calculation method is the total money, average money being managed is divided to the whole annual expenses on managing that money. So that is the percentage you have to pay. So more the corpus, less the percentage, because there are certain fixed charges which are there, even whatever may be the size of the fund. So friend, in nutshell, I will like to say that mutual fund involves a common pool of money pooled by investors who have common investment objective. They share the ownership in proportion to whatever investment they have made. They are going to share the loss or gain, whatever happens out of that. There is a professional manager who manages their fund and tries to match their objective, investment objective, and they have to bear the cost of expenses of managing their money in form of expense ratio. So if you want to invest money in mutual fund, you must understand all these things, and you should check all detail about that mutual fund. What is the nature of mutual fund, whether it is aggressive or conservative, whether it is a passive or it is a active, whether it is equity based or debt based, what is the risk profile, what is the background of fund manager, what has been the past performance. All those things you are going to check. Then only you should select a proper mutual fund which matches your investment objective, your risk taking philosophy. Now friend, I hope that I have been able to explain to you the concept of mutual fund. In the next video, I am going to discuss what type of mutual funds are available in the market today. Not discussing much, only I will list down all they are there. After that, one by one, I will be taking one type of mutual fund and discuss with you in detail how it works, what is its plus, what is its minus, whether it is aggressive or it is passive, conservative, whatever it is. So friend, I hope that you have found this video useful. If so, please like it, share it, and subscribe to our channel. Before I take a leave, I want to tell you that health is wealth. Take care of your health, whether mental or physical, by following a healthy lifestyle. And one more thing I want to repeat. Please improve yourself day by day. Try to become a better version of yourself day by day. And this channel will help you in this. There is no doubt about that. Friend, thank you very much for being with me for such a long time. I hope you are going to patronize this channel and motivate others to subscribe to this channel so that they can also get benefit from content being given to you through this channel. Thank you very much.